Hello, welcome to Swing Trading with the Day Tradestor. And today I've already done some swing trading off of video because we got hit with some news from Donald J. Trump today. News came out last night that Xi Jinping is going to restrict access and trading of rare earth minerals. But the market didn't react until this afternoon when Donald Trump decided to be retaliatory. We went all morning with a nice calm market. Some stocks are going up, some stocks going down. We were not having any major volatility. And then he decided to retaliate. He put out so Donald Trump, he let us know, so it wasn't this afternoon. It was almost 11 o'clock this morning, that he's going to increase tariffs on everything coming from China. And from that point, the market dropped like a rock. You can see this huge candle compared to the previous 3 months. We had a 2-day drop from 64.32 to 62.31. We'll just round that to $200. So it took 2 days to drop $200, and we have already dropped from 67.66 that we were at the high point when Donald Trump came out with the news. So 67.66, and we're now down to 66.12. So we're already at a $150 drop for the day in the S&P 500. So the news that came out last night from Xi Jinping in China, that he said he's just going to be tightening export controls on the rare earth minerals. He's going to deny access to some rare earth minerals. But yet, when the market opened up this morning, the market really didn't care. The market apparently only cares about what Donald Trump says and does. At any rate, you can see the drop. It's a huge candle, huge down day today. And in that move, we had we had 17 stocks hit their sell triggers yesterday. But they started really dropping today. And because so many stocks were triggered yesterday, and we got the alerts for a possible sell alert, I already sold some of those stocks. I wanted to sell them before the prices dropped past our purchase price. And also, there would have been too many stocks. The video would have been over an hour long. So it's a twofold reason why I chose to sell some of the stocks earlier today. It was pretty much right around noon. Gain of profits and to keep the video shorter than an hour. I'd like to try to keep them out 30 minutes. And going through 17 stocks certainly would way blow past the half-hour point. But at any rate, you can see how the market reacted. This is not uncommon. If you're in the markets, if you've been in a while, you'll see that some stocks will move like this on any given day, given the news or the way the earnings reports are released. So this move isn't anything. It's nothing to worry about, nothing to be concerned about. It's just part of being in the stock markets. So I have 7 stocks that we actually have to take a look at, and hopefully price hasn't dropped past our purchase price, and we'll be able to sell some stocks at a profit. And the first one we're going to take a look at, let's go ahead and zoom in here. We're going to take a look at Apple. And you see, so this is probably going to be what almost every single stock and every single candle looks like. So here you can see this is probably what almost every candle is going to look like. We had 17 triggers yesterday where price fell below either the fast moving average or the slow moving average, or the fast moving average crossed the slow moving average. We'll find out as we go into the stocks, as we take a look at the stocks that were triggered. But for Apple, we had price trigger by crossing the fast-moving average yesterday, and we absolutely have a continuation candle. So we're going to be looking to sell 1 book on this particular cross. And with Apple, I have 1 share per book, so we're looking to sell 1 of our shares, and we will be selling at a profit. That we sold for $247, and I bought for $240, so that's a $7 profit on that share. So now we're going to take a look at CVS. You can see that's been on a nice run. Oh, and it's really not being affected today. That's a surprise. You can see yesterday we received the alert this morning for the trigger that was activated yesterday by the price crossing below the fast moving average. But surprise, surprise, as we go in today, we are in a green candle and it's going up. CVS is in healthcare when most of the markets are going down. This is an example of how a defensive stock, which is most healthcare stocks are defensive stocks, that they'll actually go the opposite direction of the S&P 500. So we're lucky that we've got some CVS stocks and we are making a little bit of money and some gains today with our CVS. So we'll move on to the next stock, which is Howmet, HWM. You can see Howmet is an aerospace company. They design and manufacture products for the space industry and the defense industries. We've had a nice little run here. This run has gone from September 5th till today, so a little over a month. Again, you can see price crossed below our fast moving average and it crossed below our slow moving average. And we absolutely have a continuation candle going down thanks to Donald Trump and his wonderful retaliation. Now, Howmet, I currently have 9 shares. That's 3 books of 3 shares each. So we're going to be looking to sell 3 shares. And we'll be selling these at $186.79. And that will be at a small profit. All right, so that's not going. We'll cancel that. We'll try again at $186.76. And that's not going. So now we'll just leave it at 3 and we'll hit sell market. And that sold at $186.73. So from $186.73 and our purchase price of $184.90, we'll just round that down to $2 a share. So that's $6 for the 3 shares of Howmet. All right, we're now going to take a look at IWM. IWM is an ETF for the Russell 2000, and we got a beautiful long red candle today. You can see the IWM Russell 2000 small cap stocks. They've been on a nice climb for over 3 months. You can see we did not get a trigger activated yesterday. I went through my list looking for stocks that are going down and going down drastically. So what I'm going to do, I typically do not do this. It's rare that I will make a sell based only on the triggering candle. But on news like this, small caps are really going to be hard hit and it might take several days to recover. If tech stocks or defense stocks, especially tech stocks, if they start to turn around, small cap stocks might continue going down for the next several days. And the few years that I've been trading, almost 3 years now, that's been my experience. When we get hit with some bad news, it takes a little bit longer for small caps to recover. So I'm going to only sell 1 book. I currently have 4 books, each one containing 1 share. So we're going to sell 1 book at $240.22 maybe. And we did, and I made a profit of $9 on the sell of that 1 share. I'll zoom in case you're on a small screen. Again, you can see we did not have a trigger activated yesterday, and we did not receive a possible sell alert this morning. I just went through the list of the stocks that I own, looking for stocks that have made some really, really large moves that is likely to continue down. And I added IWM to the list just so we're at least able to sell a couple of the books or 1 book or a couple of the shares and make profits on those stocks. IWM, because they're small cap, is one of those shares or one of those ETFs that I at least wanted to lock in some profits today. So if you have IWM, you may want to consider doing that as well. Another ETF that we're going to look at is UDOW, UDOW. This is another ETF, and this is an index to the Dow Jones Industrial Average. Now, the Dow Jones was already in a downward trend as compared to the IWM. IWM has been in a long uptrend, but the Dow Jones, as you can see, is going down. So this is the UDOW. Even though they're both indexes to popular stocks and large companies, large being relative for the grouping that they're in. So the IWM is, again, the 2,000 largest cap companies within the small cap group. And the Dow Jones Adjusted Average is just basically made up of long, stalwart, large cap companies. But they've been going down for now the 5th day. And today, thank you, Donald Trump, for really impacting the markets. Now, I currently have 6 shares. Each. That's 3 books with 2 shares each. And unfortunately, the current price is lower than the purchase price of 4 of the shares of $109. And then this share, the 2 shares that we bought up here around 111.30 are already sitting in a sell order. So we're going to place a sell order for 1 of the books. So for you, Dow, we're going to sell 2 shares, which is 1 book. And my purchase price for that was $109.06. We're going to go to the hundreds place, and that is 100. 10% of 100 is 10 cents. So we're going to add 10 cents to the 109.06 and make it 109.16 for our sell order price. Good till cancel extended hours and confirm and send. Now tomorrow, if we have a continuation down and it's really moving quickly, I may go ahead and just place another sell order. It really doesn't matter because price is so far away, so it's not going to really be triggered by any major rapid move. The climb up is much slower than the slide down. Again, Chutes and Ladders. Chutes and Ladders was a fun game, but as long as it took the climb all the way up to 660 level or 70 level, even to the 99th square on the board, if you hit that long slide, we're down just like today. And forgive my stumbling and bumbling. My attempt to liven up the commentary a little bit is a little wanting, isn't it? All right, the last stock that we're going to look at today, this has moved a little bit faster than I thought it would, is Uber. Zoom in here. You can see we had a long down day for Uber yesterday. We crossed both averages, and not only that, we had the fast-moving average towards the end of the day cross below the slow-moving average, and we have a clear continuation of all of this action. I currently have 3 books, and each book has 2 shares, so we're going to hopefully sell at $94.35, and we will be selling at a small profit. So we're going to look to sell 1 book, which is 2 shares, and set it for $94.37. And I bought them at $91.53. We'll just count that as 47 cents and $7.53. We just round it down to even numbers. So that's $3 of rough profit per share. So that is $6 profit for selling Uber. And I apologize. I was selling only 1 book for the cross of the fast-moving average, but we crossed the slow, and we crossed yesterday of the fast-moving average below the slow-moving average. And if you're new to my videos, when we have this type of cross, I look to sell as many shares as I can at a profit. I want to try to get out of that position altogether when we have the fast-moving average cross below the slow. So I'm going to sell the other 2 shares as well. And that'll be another $6 profit. And we only have 2 shares left, and they're already up here in a sell order. And this is how the swing trading strategy is intended to work. Let's zoom back out. You can see that we bought in, actually, I already had 8 shares when I transferred the accounts over, the old account to the new account, and we actually had been holding on to them for a while. So then I eventually was able to sell some of these at a profit, and then I started day trading. But if you look here, we can see we have a cross back here on September 16th, and probably I would have bought around here. So never mind. My explanation was going to show that when we have a cross of the fast moving average, that's when we like to buy in. And then we try to sell, and hopefully it'll be at a profit when we have the cross down. And then we had another cross up, but we weren't able to buy at a point that would have been lower than the current price point here on this cross. So a few more expository stumbles. My brain was working faster than my eyes can actually see where we would have bought in. if we already weren't owning Uber. So I already had 8 shares of Uber, and my day trading, I only trade one book in and out of one book. So by the time we got here, I had the original 6 shares that were part of the old account prior to transferring to this account. And you can tell that this was a transfer from one account to another because there's no purchase price here. I had already previously owned those, so they just came over at a total of 0. But the point is, with this simple moving average strategy, is to buy at the cross that's going up and to sell when the cross is going down. Okay, so now we're going to take a look back at the S&P 500, go back to our index chart. Wow, look at that. So we've gone from 67, 66 down to 65. It was just at 66. It's jumped back up to 68. So $200. So again, this was a $200 drop in 2 days, and we're now at a $200 drop from where we were when Donald Trump put out the horrible news of his retaliation. $200 today. All right, so now we're down to $65.54, so we are $210 from our high of $67.62 today. But even though we got the majority of stocks going down, we do have a few defensive stocks going up, so we will be making a couple purchases. So that's one thing, that when you're trading and you're in this and you're investing, you do not want to be scared just because the market is going down. While the market is going down, the other stocks are going up. And one example is McKesson, MCK. We got a buy alert on that today. So we are going to go ahead and purchase one additional book. Right now we have 2. I max out at 4. So we're going to have one additional share, and we're going to purchase that at $64.69. So there is one more book of McKesson. Now it is time to take a look at our chart of the day, and that chart is Philip Morris. With the rest of the market going down, let's see, we'll take a look at our market watch, visualize, look at all of that red. Almost everything in the market was going down, except you can see there's a few nice green spots. Pepsi went up a little bit more than Philip Morris. AutoZone had a pretty good day compared to Philip Morris, but Philip Morris is one of the very few stocks in the sea of red of the S&P 500 going down. Thank you, Donald Trump. This turn down today is what some experts have been waiting for and expecting due to the tariffs over the last several quarters. They just haven't materialized. And the big question is Donald Trump actually going to follow through with it? Oh, and you can see consumer staples. So Philip Morris is in the group of consumer staples. There are 11 sectors of the of the economy. 11 economic sectors, and consumer staples usually is considered a defensive sector. And you can see some of these did go green. So looks like more than half of the businesses in the S&P 500 that are in consumer staples did have a pretty good up day compared to the rest of the sectors. So we'll go back to our chart, and you can see Philip Morris opened up at 156.83 and closed at 160.60. So for Philip Morris to perform with more of a 4% gain compared to so many other stocks that just went down is nice. So we can make money on red days, not just from selling stocks to protect our profits and lock them in, but also there are stocks that do go up on red days. Now, I currently own 4 shares of Philip Morris, and that's 1 share for each book. It is a lot of work with the strategy that I have with having over 200 stocks, but by having so many stocks, when some stocks are going down, I usually typically have some that are going up. And Philip Morris worked out for me today. So let's go back to our 3-month and 1-day chart. We'll go back to the S&P 500. And you can see we are more than $200 down, or more than $210 down from our high of the day. So now we'll take a look at everything that I did on video, and you'll see a list of the stocks and of what actions I took off video, and they're listed here. So for today, I sold LHX, which is L3 Harris, Newmont, which is a gold mining company, Take-Two Interactive, which is a game company that makes Grand Theft Auto, FXI, which is an ETF for the Chinese markets, Lam Research, Apple, Howmet, the ETF IWM, and the company Uber. I placed sell orders for TPR, which is a luxury goods company that owns and manages several luxury brands, GE, Roku, Edwards Life Sciences, Visa, ETF XLI for industrials, and UDOW, and we bought McKesson. So if you're following me and making some of these trades that I've made, if you're making that decision because I'm showing you everything I do and I've gained your trust, hopefully you bought the day or several days from where I made the original purchase, and now you can make these sales if you're going to copy me through the selling process. Again, if you do copy my trades, you're doing it at your own risk. I am not a financial expert. I'm just a guy, average Joe out here, making a little bit of money. And in reference to my monies, we'll go back and I'll show you what my gains were for the day and also the week. Every week I show you the gains at the end of the week and what my portfolio balance performance was as of yesterday. So my profits for today were a little bit more than $200. Any losses aren't real losses. This is just how Charles Schwab accounts for the sale of my shares. It is first in or last in, first out. But if I have any shares that are able to sell at a profit, not my last shares that were purchased, maybe they were purchased the 2 purchases ago or 3 purchases ago, but I only sell shares at a profit. If I'm unable to sell shares, I will not hold them. I'll place sell orders. So we'll just say that I'm roughly around $200 profit, but this is showing $181 of realized gains today. And we had, usually I'd make over 200 trades a day, but because everything was going down, especially after 11 o'clock from that wonderful news from Donald Trump about additional tariffs being put onto China, we only had 78 trades today. Now for the week, you can see I had 631 trades for the week for a total gain of $2,302.07. And if you're watching my video for the first time, the reason I show my trades is I'm trying to gain your trust. Unlike most of all the other people who are saying that they are trading, they never show you any of their trades. They just show you a chart. They say, here's what I did here. Here's what I did there. I'm showing you my trades. Even though I didn't show you all my trades today, I will plan to show you my trades in the future. I thought the video was going to be longer, but I went through the trades. I tried to do half of them before I recorded, and I tried to do half of them in the video. I thought the video was going to be much longer than it actually turned out being. We're only at 23 minutes right now, even with my stumbling and bumbling through my expository, blubbering. And the point of the video is I want to show you all of the trades I make, so I will not do that again in the future. I will show you all of my trades. If I end up with a lot of trades that day, then I'll just try to move quickly through them because some of it's the same process. Okay, so again, $2,302 for the week and $181 for today. My portfolio performance as of yesterday, this is a day behind. I'm looking at 8.81% compared to the S&P 500 at 5.53%. And the old account, prior to transferring all of the assets to this account, I was performing at 16.26% compared to the S&P 500 at 10.54, with a combined total of, for my account, 25.07%, and the S&P 500 at 16.07%. So I am performing 9% better than the S&P 500. And it feels good to be a profitable trader. Most of the traders, if you've done any research, you'll know that over 90% of anybody who takes up trading fails. I'd like to consider myself a successful trader because of the strategy of having over 200 stocks and only swing trading those stocks and only day trading those stocks. I'm not spending hours hunting for stocks and companies that I've never heard of, that you've never heard of, and almost nobody's ever heard of. Very few people have ever heard of, just so I can find something that might be moving and risk taking a gamble and trying to become a successful trader by that type of day trading. My day trades are all within my 200 plus basket of stocks. So that ends today, Friday, October 10th. That ends the week. I hope you all have an absolutely amazing rest of your Friday afternoon and enjoy your festive holiday weekends, getting ready. Maybe some of you guys are going to be having some Halloween parties or fall parties. And whatever you're partying for, have an absolutely amazing and safe party time.